Good evening, ladies and gentlemen. Welcome back to our investor briefing. Hmm? Welcome back to our investor briefing. I'm your host, Dan Theok, Senior Vice President of Investment Banking. Thank you for tuning in to our virtual briefing today. Today, we'll be looking at Mayberry Jamaican Equities Q4 2024 results. As I said earlier, today on the panel, we have our Executive Chairman, Christopher Berry, along with our Investor Manager Representative, Gary Peart. And I'd like to extend apologies for the absence of Patrick Battier today. Welcome, Chris. Welcome, Gary.
Hi, guys.
Hi, everybody.
Well, if you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this just about once a week. I remind you that we'll be having our Q&A segment at the end of the program, so please stick around with your questions. Also, if you want to embark on your very first investment journey, you should take that first step with Mayberry, of course. Follow us on social media to learn more about how you can get started today. Okay, so we're going to share a presentation on MJE's results for 2024. If we bring that up, I'd like to walk you guys through the results and in particular Q4 and the full year. Okay, so first up, when we look at the results, we can see that the total comprehensive income improved by 124% to $584 million. You can also see that total assets decreased by 3.4% to $24.5 billion, while total shareholders' equity increased by 3.4% to $17.9 billion. And we'll explain why total assets fell by a bit. It has to do with a major disposal that took place during the year. So wait for a second, I'll explain that. Additionally, net shareholders' book value, that increased by 3.4% to $14.89. And the closing share price at the end of December 31st, 2024 was $11.86, up 19% from the prior year. Next slide shows the summary of changes in statement of comprehensive income. And you can see for the full year that the company had total comprehensive income of $584.4 million. And that's a $2.9 billion or 125% improvement over the $2.35 billion loss that the company experienced in the previous year. From a net profit perspective, in the previous year, there was a $2.4 billion loss, whilst this year, from a net profit perspective, there's a $138.5 million loss. And we'll explain that when we go through on the next slide. It includes fair value adjustments going through the P&L for associates, as well as the fair value adjustments that went through OCI. And I'll talk a little bit about the top performing stocks and in general why we had that small $138 million loss, which is really the netting of a $1.3 billion trade gain, $1.5 billion trade gain, offset by some unrealized fair value losses. That $1.5 billion fair value gain, which is real money, is actually associated with the disposal of MJE's position in CPJ. So MJE sold its 20% position in CPJ and realized a $1.5 billion gain. Cash transaction of that value is close to $3 billion. And you'll see that they use those proceeds wisely. On the next slide, you sort of see again the closing total assets of $23.7 billion, which I said again was down by 3.4%. And that's primarily because of the disposal of the CPJ assets, which at book value was close to $1.7 billion. And then you can see total liabilities shrunk by $1.4 billion. And so Mayberry used most of those proceeds to reduce its debt. So additionally, we can see shareholders' equity increased by 3.5% to $585 million, up to $17.9 billion. And the net book value per share closed at $14.89. What's good about this is you can see that the total leverage of the business has shrunk even more, with equity now exceeding debt by 3.1 times. So think of debt to equity ratio as being 29%, which is really low. And the debt to total assets is being even lower at 23%. So this is a business that's operating with a very low level of leverage, and they're focused on increasing shareholder value, which you can see in the shareholders' book value, which increased $584 million up to $17.9 billion. So shrinking assets is mainly because of a large disposal that happened during the year. What's more important is that they increased the equity of the business to $17.9 billion. That's like the total net assets, reduced the leverage even more. And we'll be talking a little bit about that with Chairman Berry. Next slide shows top 5 additions in Q4 and top 5 disposals in Q4. So not for the full year, just for the fourth quarter. And, nothing major happening here. Small changes in positions of JBG and Carib Cement. I mean, with a $24 billion total asset book, you do have to appreciate that even 0.5% of $24 billion is $120 million. So a $60 million trade's like 0.25% of the portfolio. So these are relatively small trades in the overall scheme of things. But we like to show you guys what's happening so you can see where the additions and the disposals are. Next slide shows top 10 largest positions for each year. And I'll just focus on really top 5, really. So top 5 positions this year are SVL, which has 56% of the portfolio, Jamaica Broilers Group, Wigton, Dollar, and GK. And, quite frankly, there are perhaps just 2 additions, so to speak, in the new top 5, and 2 that came out of the top 5 compared to the previous year. Last year, CPJ was in the top 5, and I mentioned previously that disposal. And also last year, NCB was in the top 5. That's fallen down out of the top 5, and GK has fallen up. And that fall in NCB is not necessarily the result of us selling shares, but the result of the substantial fall in value in NCB over the last year. NCB has fallen from about $90 in value to $50 in value, and so that would affect the valuation that we're carrying for NCB, and therefore affect what percentage of our portfolio that NCB makes today. NCB is sort of the 7th largest position, which represents 2.4% of the portfolio. And again, we'll be talking to Chairman Berry and Gary primarily about the top 5, SVL, Broilers, Wigton, Dollar, and GK, just to get some perspective on how these guys feel about these stocks, how they performed in the last year, and what they expect for them going forward. Next slide shows the performance graphically in both the net book value or shareholders' equity, as well as the stock price. And as we mentioned before, the net book value increased by 3.4% from 14.4 to 14.89, and that's really a good indication of value. This is the equivalent of an equity traded fund, and so this represents the total value of all of the equities that we have divided by the total number of shares in issuance, and it gives you sort of a feel for what should be kind of like a worst case view on the value of the portfolio per share. If we were to sell all of our equities and pay out all of the shares, this is how much each person could get per share, $14.89. And that's really like sort of, we believe, the worst case way one should view the valuation of the portfolio. And I said it before in the last quarter's briefing, and I want to repeat it again. We did like a near $3 billion sale on CPJ, and the exit price on that, it's public information, was $10.50. At a time when the market price for CPJ was like $9. So we were able to do a large transaction at above market value, certainly the JSC market value. And again, it demonstrates our ability to liquidate positions, long-term holds, and sometimes at above market prices. So once again, we do believe that the JSC market value for the equities really should be viewed as sort of the worst case position, so to speak, or a fair value judgment of the value of the fund. And so when you see you hear Gary Parrott saying this all the time, when you see the actual share price for MJE closing at $11.86 versus the NAV of $14.89, that's like a 25 to 28% discount. It's clearly demonstrating that you can get Mayberry Jamaican equity stocks relatively cheap to their NAV or their net book value or their total net assets. That's all we're going to keep saying, and hopefully the market will figure it out one day. Next slide shows the graph of the relationship between the NAV and the share price. And what we see here typically is the share price, for the last 2 years is constantly below the NAV, maybe a 20 to 30% discount. Don't know why that is, to be quite frank, but as long as the red line is below the blue line, it means it's a great buy opportunity. For some reason, the market isn't appreciating the NAV, and the share price doesn't yet reflect it. But what we can say to you is the NAV all around the world is usually a good judge, and you would actually expect the share price in many occasions to be trading at a premium to NAV, especially if it's a good fund that has good positions, good assets, and the prospects look good. Then you would actually, in some cases, actually expect to see the share price trading at a premium to NAV. So that's the briefing in a nutshell. We're going to jump into some Q&A. And again, I want to remind you folks to send in your Q&A. So overall, all in all, we increased the overall shareholders' equity position of the company by $585 million year over year. Did a pretty big transaction with CPJ, made a $1.5 billion trading gain on that transaction. We had unrealized trading losses for the year of $1.4 billion, which is still better than the unrealized losses the year before, which were $2.3 billion. In a market that was sort of pretty sluggish for 2024. And I say pretty sluggish because the JSC main index increased by about 2.6%, but the junior market index fell by about the same, 2.6%. So sort of mixed apple of results for the year. In our top five, from my recollection, which is SVL, JBG, Wigton, Dollar, and GK, we had two good results in the fact that Jamaica, Dollar's results were up by about 11%, the share price, that is, from $2.70 to $3. And Wigton was up by about 70%, from 79 cents to $1.39. But then our largest position, where we have 55% of the portfolio is in SVL. SVL stock price actually fell by 9%. We'll talk to Gary a little bit about that. Fell from $27 to $24. And Jamaica Broilers, that position increased by about 5%, from $34 to $35. So I definitely want to talk about those top five to Gary and Chris. And so let me kick off first with Mr. Berry. Mr. Berry, 2024's results, a bit of a mixed bag for the country and for MJE. But in general, I think we've got a good mix of stocks, good portfolio, very low leverage. How are you feeling about the outlook for 2025 for MJE and for the wider stock market?
I think 2025 is going to be a better year than 2024 for multiple reasons. The BOJ interest rate policy has definitely beaten the economy, and we're now officially in recession. So I think the focus is now going to shift from inflation to growth, and that's going to be positive for the market. Also, it's an election year, and I think it suits the government to increase their spending, because the monetary policy shift takes a long time to actually feed into the economy, whereas if the government increases its spending, it will affect the business climate in a much faster way. So, on the balance of all the things I'm seeing, I think it's going to be a good year.
Yep, great. I'm inclined to agree as well, too. The significant reduction in interest rates that we've started to see in the last 5 months, and the relaxing of monetary policy, I think is going to be great. We saw again today, I want to say for the fourth week, 30-day CD rates at roughly 6%, and there's about $125 billion of money invested in that. And I think eventually those folks are going to sort of recognize that they have to try to shift to keep up with inflation. And I think in terms of asset classes, you've got fixed income, you've got real estate, you've got equities. Real estate feels a little hot right now to me, and so I think equities would be a naturally good switch. And so I think we're going to see a lot of money switching from fixed income, where there's over $300 billion rather invested in GOJ treasuries, whether 30 days, 90 days, 2 year. bonds, over $300 billion there, and those folks are going to find that they're not keeping up with inflation. So I think, the indications are great. And then we had the Minister of Finance recently, and she mentioned them increasing the threshold for the junior market from 500 to 750 million. So we think that's going to also create some impetus and desire for more folks to come to the market on the junior markets. I think this year is going to be a pretty active market for both junior market and the main market. So I'm excited about that. Mr. Parrott, your turn now. SVL, we just discussed it. It's a top holding of MJE. Stock price year over year is down by 9%. You know, the stock's been as high as $30 comfortably, ended 23 at $27.10, and then ended last year at $24.70. Right now it's down to roughly $21. You know, what's happening with SVL? You know, what you got planned for us? What's your outlook? How are you feeling about it? This is a major position for MJE. Presumably, it's the number one reason why you're over there. You know, tell us about what's going on at SVL and what we can be hopeful for over the next 12 months.
Well, afternoon, everybody. The audited financials are due February 28th, so I'm kind of limited
Gotcha.
in what I can and can't say. I mean, it's another 2 weeks, give or take. But the team at SVL continues to execute on the strategic plan and budget, etc. 2024 was difficult, certainly with Barrel. As we indicated earlier, from a gaming perspective, Barrel decimated St. Elizabeth, Westmoreland, which for our box business was a big concentration, so we're impacted on the revenue side. Across the island, retailers were down for a while. So for the months of July, when hurricane hit, August, we were recovering. So, revenues were pretty low. The distribution, ideally didn't get back up and running until, I would say, the back end of December. So we would be potentially impacted by that. And that's just right across the group. In terms of, our other businesses, they continue to go down the road. I think, where the value is in SVL going forward is fintech side of the business. We finally got our remittance license, and so we're looking, have the approval to fully roll out. So going forward, that's an area that we're looking at. So, in preparation for that, we've been carrying, that subsidiary for about 3 years, that you're staffing up, expecting approvals, etc. So there's a cost in carrying. Going into 25, we expect that cost to go away in the sense that, you start to get approvals across different businesses. The bill payment business there, you finally got our biggest biller, which is JPS, so you have the full suite. So we expect to start to extract revenue from that side. So the costs associated with that will go away. Remittance, we got our approval, by the back end of the second quarter, we should be fully up and running with the approvals there. And ultimately, that's going to be the future of the company, because whilst we have our online business, we don't have our own wallet as yet. But certainly, now that we're a remittance business, we can get access to the sandbox, so we'll roll that out. We have a lot of ideas there, especially with our business in Ghana, where it's fully digital. We'll be able to roll out some of those things that we're practicing now in Ghana, here in Jamaica. So we'll just need the necessary approvals. We have to work with the regulators. We want to make sure they're comfortable, that we're compliant with everything. And so once we get that full go ahead, we can then really deliver on that strategic plan. We have some other investments which we'll speak to when the numbers are out. But until people really understand the true potential of the business, the upside may be capped. But every time, the stock goes to a particular level, it's an opportunity for MJE to pick it up at a relatively cheap value. And you'd have seen in the portfolio, based on the portfolio mix, MJE has actually increased its position in the company, which we think is good. So once we start to pump out and the strategy is really coming together, people realize that, the prices that SVL has been trading, certainly to the back end of 24, are pretty good value. So we look forward to surprising the market.
Great. We look forward to that because I do think SVL has, substantial potential, and it's really sort of a digital transactions company, and that's the most important thing. And we see you guys have been working on that for 3 years to really roll out those capabilities. So I really look forward to seeing that, having you back to talk about SVL's results in particular. But from an outlook perspective, I do think the business has like substantial potential. So, Mr. Berry, one other.
But before you finish,
Sure, go
sorry,
ahead.
I
Go ahead.
got one critical point.
Please.
Sorry,
Please.
it just came out of it. Sorry, my apologies. 24 also from horse racing perspective, we took a hammering on that side as well because Barry shut down the plant for a couple of days, and to bring that back up, required more capex than we originally budgeted for, etc. And then also, the hostility across the regulations, etc. It costs the company quite a bit. So every time there is a shutdown, it's costing the company in excess of $100 million.
Wow.
So, we've been shut down because of ill-advised legislative changes. I mean, so much so we had to increase security after the legislative change wasn't accepted by the market. And we had to secure the same regulators we told that was a bad idea. The hottest expenditure I've ever had to approve. So what we want, going forward, we can't afford to be losing the kind of money we're losing at K-Manas. And, we need, I appeal to, the government, the Prime Minister, Minister of Finance, that, we need to have more harmony. We need to have, a team effort coming from the regulators, government, the stakeholders, because, SVL, SVRL alone cannot bring K-Manas to its true potential. And certainly for 2025 is something as executive chairman I'm going to spend a lot of time on, because, SVL can't afford to carry some of the expenditure and costs out at K-Manas that we're carrying now. And with certainty, we can't operate in an environment where, people are rowing in different directions. We're clear on what we do. There's a lot of potential that we believe we can extract out at K-Manas. We think K-Manas can become, one of the biggest entertainment spaces over in Portmore. So, we just need any time to discuss our plans, etc. And I think once we can get everybody on board with that done, we'll be able to turn this major drag on our numbers into a positive. And not just for the SVL shareholders. If we're able to execute on what we have planned out at K-Manas, it will be one of the biggest and brightest investments that this country would have seen.
Okay, thanks for that. We definitely look for future updates in that regard. We're coming up to the carnival season. Is there any chance we're going to see any events over at K-Manas? This Mute Mile was amazing, and it showed that you guys are able to put on a first class act out at K-Manas. It really is a great location with an infield of, 100 acres, 200 acres. Any chance we're going to see any, carnival events or anything like that happening out there?
We have to say thanks to our overseas partners, Nairas. The guys that came down, it's amazing. We've been able to convince them to come on board with the vision, and they're always blown away by, how wonderful the Jamaican punter is. They don't get that type of energy, where they are. And, so Mute Mile has impressed a lot of people. But more importantly, we had our first third-party rental, after a big up Zimmy Mafood and, his Zimmy series. And, I'm happy to report that he was very happy about, how that event went, and his patrons really loved the location. And, where we are now, we're getting a lot of inquiries, to have events there, because K-Manas, the infield at K-Manas is potentially, one of maybe 2 locations in the country where we can have an event and we can comfortably comfortably park, everybody that goes to an event in a secure way, because once you're on the infield, it's pretty easy to secure the infield. So the feedback from that event was amazing. Solomon has indicated that there's a lot of inquiries now, because it's potentially becoming one of the hottest places that you want to put an event because of how easy a lot of the execution, etc. is. So I wouldn't be surprised, Dan, if we have some carnival executions there. But certainly what it means for K-Manas is that it's another source of revenue. And in short, I always say to people, out at K-Manas, we have 365 days of expenses and we only have 80 days of revenue. So we need to come with ideas. We actually have the ideas. We just need to have the other stakeholders on board where when we execute these ideas, we will then have 365 days of revenue to go along or to pay the 365 days of expenses.
Gotcha. That makes perfectly good sense. Okay, good deal. We look forward to getting future updates on that. Chairman Barry, I want to talk about another top five company and get a feel for why you like this one, and then I'm going to start picking some questions out from social media as well too. So Jamaica Broilers, this is one that stock price moved by 5% during the year. It's your second largest position now. Tell us a little bit about why you like Jamaica Broilers, and on the back end of that, tell us if you're worried about the bird flu.
Okay. Jamaica Broilers is one of Jamaica's favorite foods. Jamaican people love chicken.
Yeah.
And Jamaica Broilers is one of the two that share the position with CB. They're the two largest producers of chicken in Jamaica. So we think they are well positioned. It's a staple. They have a steady growth. People have stuck to the product through thick and thin. And I'm not worried about bird flu. I'm sure they're making sure that it doesn't come to Jamaica. And if it does, I'm sure they'll also manage it well. So I'm not concerned about it.
Okay. Good deal. I appreciate that. Let's talk a little bit about Wigton's, about MJE's investment strategy. Again, I took note of the fact that the business is operating with very low levels of leverage, $24 billion in assets, only $5 billion in debt, $17.8 billion in equity. So it means your equity exceeds your debt by, 3.2 times. I'm used to seeing companies who borrow money have a cap on their debt to equity ratio, which is to say you can't borrow more than 4 times the equity or 5 times the equity, 3 times the equity, whatever. And here's a company where your equity exceeds your debt by 5-fold. Your average cost of borrowing looks like it's about 11%. Last year, you're looking at your cash flows. We can say you had $600 million in interest expense, $500 million in dividends. So your dividends are almost covering your interest costs. And with $24 billion in assets, it looks like your assets only have to grow by 2% per year and you can cover your debt. So you seem to be making a very conservative bet on the growth of the market by using very low levels of leverage. Is that kind of a philosophy? Is there any chance that you might increase the leverage? Do you think the business is under-levered? Or are you keeping yourself super flexibility so that you can use leverage when you see great opportunities? We're just, curious to appreciate why the business reduced its leverage over the last year, and it looks a little bit low to me.
Yeah, so I would say that, we've been in this business a long time. I mean, we took MJE public a few years ago, but we've been buying and selling equities for a long time at Mayberry. And one of the things we, want to get to, at the height of our portfolio is 150 million US. You will have to be able to ride out the ups and downs, because the market you can't get in and out fast when you have that much equity. So, we took the decision to keep a fairly low leverage because, it's easier to manage the volatility when the leverage is low. And it worked well for us. You see, we went through some very volatile times with COVID, and from 2020, last 5 years has been pretty tough, and we have been holding up, and we're just waiting for the next bull market now to really reap the rewards of the market.
Your prudent investment policy. And then let me follow it up with your best performer for the year, which is Wigton. That stock price has moved from 79 cents to $1.30, up by 70%. and it looks like you guys are still holding. So, where's your headspace on Wigton? Isn't $1.30 isn't an exit for you? It doesn't seem. You're up 70% in the last year. It's the third largest position in your portfolio. I mean, where's your headspace when you think about Wigton stock?
So from my perspective, I think it suits the GOJ to use more renewables. The missing part of the formula is that the OUR needs to modify the formula so that there's an incentive for bidding with storage. Because the downside to renewables is that, let's take solar, for example. The peak demand in Jamaica is 6 to 9. And at that point, there's no solar.
Mm-hmm.
So right now, solar is the cheapest of the renewables. If there were storage built into that a solar system, we would be able to have cheaper power and use the power when we actually need it. Several countries around the world are moving to this model, and I think Jamaica should follow suit. And if they do, you're going to see big demand for renewables. And I think Wigton is ideally placed to take advantage of that. Recently, we did pretty well winning a bid. And I think that will continue. And I think, I always said that once Wigton starts expanding, the stock will do much better. And I think it's actually trading below where I expected it to be right now, because they won a bid. But I guess, it's a ladder. First you win the bid, then you build a plan, then your earnings go up, then you win another bid. And then, people realize that, it's a serious company, serious energy company, not going away. And the price will go up.
Good deal. And let me go ahead and declare my conflict now as a board director of Wigton. And folks, we will have the CEO of Wigton, Gary Barrow, on our program next week, Wednesday. So please tune back in for that. But yeah, Wigton, largest independent power producer selling renewable energy in the English-speaking Caribbean with 63 megawatts of power, largest in English-speaking Caribbean. It's been around the longest, right? The government of Jamaica started this business 21 years ago when it was kind of more experimental at the time, and PCJ had to help bring the financing to make it happen. And now that technology is pretty mature. Wigton is now Wigton Energy, so it's much bigger than just wind farms alone. We talked about them winning 50 megawatts or half of the 100 megawatt tender that went out 2 years ago. They won half of it. And so they're getting ready to build a 50 megawatt solar farm. They also got the right to replace their oldest 20-year-old 20 megawatt phase one facility, to replace that 20.7 megawatts with 20 megawatts of solar. So Wigton's definitely moving places. Imagine 63 megawatts. They're about to build 50 megawatts. So all things being equal, that could increase the profitability of the business by 80%. Jamaica needs to add about 300 megawatts more of renewables in the next 5 years if we're to meet our 30% target. If we're to meet the 50% target, which is impossible, then we need to add more like 700 megawatts of renewables. And I just don't think we have the capacity to do that, quite frankly. Government moves too slow. The regulatory process is just too slow. But having said that, Wigton is an entity that's well positioned and poised to take advantage of this ambition of Jamaica to get to 50% renewables, which we can't get to in 5 years, can't get to in 7 years. We can only get there when we introduce storage, as Chairman Berry rightfully cited, but this gives Wigton, sort of unlimited capacity to expand. They're not going to win all of the bids, but again, at 63 megawatts going to 113, they could increase their profitability by 80% in the next 18 months when they roll out these two next expansions. And then there's opportunity to win 100, 200 megawatts more of expansion over the next 3 to 5 years. It's a great company, very well positioned, $3.2 billion cash on their balance sheet last time I checked, and they're about to do 2 phases of expansion. So it's a great business, and I think it's a good hold for MJE. I think it's a good buy, even at $1.30. We're going to come back in 5 years' time and go. I remember when Wigton was a dollar stock, right? Kind of like, Chairman, perhaps when you look back at Carib Cement and say, hey, I remember when Carib Cement a decade ago was a $3 stock or a $2 stock.
62 cents.
62 cents. I can't even remember that far, Gary. I remember $2.
It was at the same time.
Yeah.
The same period.
Wow, crazy. And today it's at, $80 and climbing, right? And I still like Carib Cement at $80 because, we talked about the government spending that's going to happen and the need to improve infrastructure. Every month I hear of a new bridge that needs to be replaced, roads that need to be fixed, bridges. And with the road works comes a lot of concrete work. You've got to build the verges and the coverts and the overheads and the sidewalks and whatnot. So I'm here to say that concrete, steel, and asphalt, those businesses are going to be huge, and I only know of one of them that's listed on the stock exchange, and that's the Carib Cement. So I like Carib Cement over the next 5 to 10 years because Jamaica, for the next 20 years, is going to be spending crazy money on infrastructure development. The difference between a third world country and a developing country or first world country is infrastructure, and we really are lacking in infrastructure. Okay, heading back to the questions. Don't want you guys to feel left out. Okay, so Limitless Podcast asked, do you think the junior market limit will apply for new listings only? I don't know. I think that might be the direction they go in, but I think we're going to figure that out in the next 30 days. What we do know, Limitless, is that the threshold is being increased from 500 million to 750, and that's going to be great for the market. So we wait to see. Good question, whether that's for new listings only or otherwise. Okay, Philip Burgess asks, and I'm going to throw this one at you, Gary. Do you think Main Event is undervalued? And I threw it at Gary because Gary happens to own a nice block of Main Event. Do you think Main Event is undervalued?
It depends on how you see the future of our country. So Main Event is the best player in this space. But the problem in this space is that everybody keeps undercutting, underbidding each other, and there's not a lot of profit in there. So, for example, you'll hear people say that Main Event is expensive, but you never hear them say that Main Event is not good. You never hear them say that Main Event is quality because they're the best, and they also have quality. So I think Main Event could significantly increase its earnings if they're able to differentiate their product better, and they're able to create packages where people really understand what it is that they deliver. So if you do an event and Main Event rolls out your top line sound, there's no other company in the country that can produce an event of that quality of sound. But you don't know that until you're in the space and you're hearing the sound and you have lights, right? The amount of lights at an event really changes. So when I say this to you, I, just like you, I didn't really know until I've actually gone in and they've explained and they've showed it, right? So the reality is that the top of the line lights is 10,000 US for one. You can get another one out of China for $500 US, but the difference is there for all to see. You don't know until your event is underway that you have gotten a substandard deal, and it's too late. You can't change at that point. So I think if Main Event can find a way to price their business, their solutions, where customers understand it, and therefore then the customer can then pass on the cost or the value associated with it, you'll get a different scenario. So, for example, SVL is involved in some concerts, etc. And when you realize what the difference in sound was, we're saying to Main Event, listen, tear your stuff. So I can then advertise that this concert you're getting Main Event 5.0, which is the best sound, right? So when events come, people be like, hold on a second, what kind of sound am I getting? Is it 5.0? Is it 1.0? You know that there's going to be a difference in pricing for the promoter, etc. Outside of that, there's still a lot of space for Main Event to grow. And, so ultimately, I believe it's undervalued, but it's going to take a lot of work by the guys out at 8 million and Solomon, and especially Richie and his team, to move those revenues. Are they capable of doing it? Yes, I believe they can, because they continue to reinvest, in the business. And I think they'll be able to figure out this pricing genie issue. And I think once they do that, you will see a significant increase in their volumes and margins.
Good deal. And a follow-up question is Mayberry likely to do more collaborations with Main Event, and are we likely to see more concerts?
The answer is yes. So they collaborated with them for the Boys to Men as a pilot, and that went well in terms of the feedback from the patrons, etc. It was amazing in terms, which is what I can tell you about the whole song. Because of the rain, etc., it wasn't the financial success that everybody expected. But it's clear that if you didn't have those challenges, it wouldn't work. I wouldn't be surprised if within the next week or two you hear information about another concert. But the collaboration, between themselves, Mayberry, Live and Direct. The intention is to do at least 2 concerts a year. And as I said, I wouldn't be surprised if they announce another concert the next week. And with certainty, they've also identified a date in either November, that space, for another similar concert. So they're down the road with that. The pilot went well. The investors understood what happened. The lenders understood what happened. And, so we're looking for the next concert to prove it. Once it's proven, we open the doors for, other equity investors and debt investors.
Great. Sounds good. All right. Continuing to go through the questions. Chairman, I got one for you. Do you think the tariff wars will impact Jamaica or the stock exchange? What are your thoughts there?
Mr. Dan, the what?
The tariff wars. Do you think the tariff wars are going to impact Jamaican economy
or
the stock
tariff?
exchange?
Tariff.
Yeah. Mm-hmm. So the thing that Trump is starting.
Tariff wars. I see what's happening, and I just don't believe that these tariff wars are sustainable. The consequence of them is not good for the initiator of said wars.
Mm-hmm.
They probably are studying some kind of economics that I have never heard of. So I think, it's an experiment, and if the experiment goes on too long, it's not going to end up well. But I think, America is a country that they love money, and they're, great capitalists, and I don't think they're going to make decisions which is not in favor of business, and tariffs don't work well with business. So I'm thinking it's not going to last very long. I'm hoping. Let me say hoping.
But you wouldn't expect any fallout to impact Jamaica or a stock exchange?
Well, the thing about tariffs is like this, tariffs can cause a global recession. And if it causes a global recession, then that will impact Jamaica. Our 2 biggest revenues are remittances and tourism.
Mm-hmm.
And if you have a worldwide recession, those 2 things will be massively impacted. So it can impact us significantly.
Gotcha. Okay.
What I would add, Dan, is, I think a lot of the stuff that is happening, it's very sensational when it's announced. But on the back end, we need to follow through on what exactly happened, right? So we heard initial threats, and then they were really followed through on because people sat and spoke, etc. So over time, it's really what is likely to happen. As Chris indicates, the people in the US ultimately are into the profit business. And I don't see them doing something that is going to ultimately reduce their profits. The reality is that, if they start going down that road, as Chris says, yes, Jamaica will ultimately be impacted because, A poorer American is not gonna fly to Jamaica to enjoy a vacation because he feels poor, right? And so, from my perspective, I think, ultimately the US guys understand that it's a negotiation. And if somebody calls the bluff, common sense will prevail. So I think ultimately, it will pass a new cycle and then we go back to what matters.
Good deal. Thanks for that, Gary. Okay, Sean Farron asks, is there another MJE bond around the corner? So let me take that one. Sean, the last MJE bond we did was a 24-month bond. I don't see us doing any new bonds before that, Mayberry Jamaican Equities, that is, but I do see them looking to roll over that bond when it does mature. There is an MIL bond, funny you should ask, that's currently out there in the market. So if you're looking for a good fixed income investment, then you should look towards the Mayberry investment bond. That bond is $2.2 billion. It's for 18 months, I believe. It's at 10.25%, if my memory serves me well. We have the right to upsize it. It's going to be secured by our margin loan book portfolio, and it gives you a great opportunity to earn fixed income with quarterly interest payments in a secured instrument from a broker that you can trust. So definitely go and get yourself some MIL bond if you're looking for fixed income investments. I think it'll be a very attractive bond. We spoke to how interest rates are coming down. 30-day CD rates are now down to 6%. 2-year CD rates are like 6.5%. So this is going to be 350 basis points above the risk-free rate. So I think it's a great instrument to invest in, and I think the next time we come back to market in 6 months' time for MIL, interest rates are definitely going to be lower. So I don't think you're going to get many more opportunities to invest in an 18 or 24-month instrument and earn double-digit interest. I think that those rates are going to be down by 100 basis points at least in the next 6 months. So, hey, great opportunity, good time to invest, Sean. I hope you'll take advantage of that opportunity. 2 more questions.
Yeah,
Go ahead.
Dan, before you go on,
Yep.
I think it's important. As the investment manager for the portfolio, tagging on to that question, right? It's interesting. When we took debt into MJE, there were concerns from people about interest expense, etc., etc. We spoke about why Supreme was an important part of the portfolio, because the dividend income from Supreme, helped to cover the interest expense, etc. The fact of the matter is that you can't. There's not a guarantee that MJE will always take debt.
Yeah.
As the chairman explained a while ago, we're very disciplined in how we manage the portfolio. And it's important for our potential investors and existing investors to understand that. So we made an investment in CPJ. We went in, we put in governance, we made some material changes. Thankfully, the owners and the management appreciated that. They did that. We've seen a big jump. We made over 200% on the trade, and we sold. So it's important to let the investor know that that those proceeds allowed us to pay out a huge chunk of debt. So going forward, there's going to be significant interest savings and interest expense on MJE. So when you're doing your analysis, you have to take that into account. The second key point is, when we were taking the debt on, we didn't take the debt on just frivolously. We also made the point that we saw value in the market at the time. We made investments in stocks like NCB. Maybe it might have been a little bit early, but when we move with a lot of volume, right? And so when we're making, for example, those investments in NCB, people were surprised. But, we saw the opportunity. We weren't sure we can get the volume, at much lower prices. We took debt. We took advantage of that opportunity. I think where we are, I think the NCB results should come out today. I think there's a meeting today. Today's the 12th. Yeah, the results should come out today, and we'll see whether the results, hits what we expect. And so we weren't able to get certain assets. We got them, and now we've liquidated and we've come back into line with our philosophy. 2025, I think NCB is going to be a huge driver of MJE profits. So we're in a position now where if we see other opportunities, then we can always jump into the market and get some more debt at that point in time. But based on where we see the portfolio, and take into account, 2024 was a very, very rough year for stocks, right? But once again, MJE and the investment management team actually found a way to outperform the market. That's why you see our numbers being the way it is. It is a material increase from the year before. So we're able to do two things. We liquidated a position above market, and we're able to use those proceeds, pay down debt, and still benefit from a portfolio where one of the biggest additions has fallen by about what, $20, and still show a material improvement in the position of the portfolio. So it brings me back to why we do this. MJE is the only stock you really need to own. We spend a lot of time managing these parameters, and I think based on the results, we've been doing quite a good job at it. So why go out and try and buy 5 or 6 different stocks? Just buy the only stock you need to own, MJE.
Sounds good to me. 2 more questions, girl. Let me throw the first one at you and then the second one at the
Sure.
chairman. Limitless Podcast asks, what do you think it's going to take for us to have another breakout performance there in the stock exchange, kind of like what happened in 2015 or 2018?
I think we're on the cusp of that. It's interesting to ask a question. You've stated before, and based on how you sound, Dan, you're pretty confident that you're likely to see a further reduction in interest rates. Reducing interest rates is equivalent to expanding multiples on PE. The lower interest rate is the higher the average PE multiple goes. You might get into another 2 or 3 rate cuts for the rest of the year. That's going to seep into the marketplace. The real estate market seems a little heavy. You have a lot of inventory. I'm not sure how much that inventory is moving. New developments. You don't know how many of those coming on board. With lower interest rates, the bond market, not many people take on bonds. So where do you go? You go to the equity market. So once the dollar stabilizes, which I don't see there being an issue there, the stock market is where you need to be. If we go through another quarter of very good financial results from the market, you're setting the case for lower interest rates, better results. This is where people are coming. So Limitless Podcast, I think 2025 may be your next bull market.
I like it. I really do think 25, 26, the writing's on the wall for all of the reasons we mentioned. I really do think so. Chairman Barry, this one's for you. Someone is asking, how do you, is MJE considering and participating in any of the upcoming IPOs this year? Chris?
So,
Yeah.
For us to participate, we need to have a couple of factors going at the same time. The first is the issuer needs to be able to sell us, at least $2 million US or more, because buying less than that just doesn't move our portfolio. Secondly, it has to be priced right. And thirdly, we have to see that they have a growth path and management that we can trust. If they can tick those boxes, we're good. On the previous question, though, of the, when we're likely to see a serious move in the market. So my view is that, we went through this incredible adjustment in the way we look at finance in Jamaica in 2013 with the IMF agreement. And that adjustment allowed us to pay down debt significantly while experiencing much more consistent level of growth. As we learn how to manage our economy and how interest rates and liquidity affect our growth, we're going to get better at that over time. And as long as we continue to be fiscally prudent you're going to have more consistent growth. So you need growth in the economy, so that creates positive outlook, and you need corporate profits, and you need liquidity. And if you have those things all coming together at the same time, watch out.
Sounds good to me. Well, thanks, Chairman Berry. Thanks, Gary Parrott. We really do appreciate you guys' insights. Folks, I hope you found this to be a very informative and insightful forum. And that's it for today's discussions. I'd like to thank our viewers, as usual, for tuning in. We really do appreciate your support. We put on this program just for you, and we encourage you guys to stay tuned as we dive into dollar financials results tomorrow. So please come back tomorrow and join us, as we'll be looking at the dollar financial results. And I did see some questions here which seem more appropriate for that forum, so I skipped them, and we'll tackle them tomorrow if you come back. If you guys are curious about updates on our virtual investor forum, then find us on social media, because we share our live stream dates and upcoming guests on our official social media pages. So give us a follow to learn all things forum related. And remember, wise investors, slow and steady wins the race. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the like button to receive all future notifications. Keep safe, everybody. See you tomorrow. Bye-bye.